Hey guys, this is Adam Rodriguez.
And I'm Lorryann Rodriguez.
With the Rodriguez team, where your goals are our priority. And today, we're going to answer the question, what makes FHA loans so ideal, and should you consider one in your next Central Florida home purchase?
If you're in the process of buying your first home or you've been thinking about it, you may have heard of FHA loans. And if not, you certainly will as soon as you start working with a lender.
FHA loans are amongst the most popular type of loans, especially for first-time home buyers. So what makes them so ideal? And should you consider one for your home purchase? We've got all the important details.
First of all, what is an FHA loan? An FHA loan is a type of mortgage loan that is guaranteed by the government, specifically by the Federal Housing Administration, FHA. And since the FHA insures these loans, that means if borrowers default on the loan, the government will pay the lender for any losses. And the FHA does not itself lend money, it merely guarantees the lender will not face losses.
The popularity of FHA loans amongst first-time home buyers can be tracked to two main factors: low credit score requirements and low down payment requirements.
Who are FHA loans for? The FHA loan was designed for first-time buyers with lower and moderate incomes and is predominantly used by those who are making their first purchase. FHA discovered that 82% of its purchase loans went to first-time buyers.
But the loan is available to any buyer who meets the FHA criteria. Even people who have owned homes in the past can use their FHA loan to buy another property as long as the house is being used as their primary residence.
Advantages of FHA loans. You can qualify for an FHA loan with a credit score as low as 500, and that's far below the minimum 620 score lenders are typically looking for on conventional loans. FHA loans also require as little as 3.5% down, among the lowest down payment requirement in the industry. And that combination makes FHA loans one of the easiest loans for buyers to qualify for.
Yep. Now keep in mind that 3.5% is generally reserved for credit scores of 580 or better. And to purchase a home with a 500 score using FHA loans, you'll need a 10% down payment.
FHA loans also allow some flexibility related to the source of down payment funds and closing costs. Down payment funds can come from a gift or a grant, while FHA loans allow sellers to pay up to 6% of the loan amount to cover buyers' closing costs. And in most conventional loans, sellers can only pay up to 3%.
So what's the downside to FHA loans? You'll need to factor in a little more money into your closing costs and your monthly payment with an FHA loan. Buyers will also need to pay FHA mortgage insurance similar to private mortgage insurance or PMI that lenders require on traditional mortgages when borrowers put less than 20% down.
FHA mortgage insurance is paid in two ways: upfront as part of your closing costs, and then part of your monthly payment. The upfront cost is 1.75% of your total loan amount, and the monthly cost varies based on the amount of your down payment, the length of your loan, and the initial loan to value ratio.
So for example, on a $300,000 loan, the upfront mortgage insurance premium would be just upwards of $5,200, and the premium would be around $112 to $260 per month, depending on the specific loan terms. So there are limits on how much home you can purchase with an FHA loan, and it does vary a lot county by county here in Florida. So for most counties in Florida, in 2019, the FHA loan limit is $314,827 for a single-family home. A few counties are higher than that, and for example, in Monroe County, it's $529,000, which is the highest FHA limit for a single-family home purchase.
Now, how do you qualify? In addition to credit, down payment, and maximum loan amount requirements, borrowers and the home they wish to purchase must meet other criteria.
So number one, the borrower must be a legal resident of the United States and must live in the country and must be able to show 2 years of steady, verifiable employment history.
The property must be the borrower's primary residence, so no vacation cabins or rentals. And however, you can buy a multi-unit property, like a duplex, as long as you live in one of the units.
Next, the property must be appraised by an FHA approved property appraiser.
Your front-end debt ratio, which is monthly mortgage payments, should not exceed 31% of your gross monthly income. Lenders may allow a ratio up to 40% in some cases. Your back-end debt ratio, mortgage plus all monthly debt payments, should not exceed 43% of your gross monthly income. Lenders may allow a ratio up to 50% in some cases.
So there you have it, folks. FHA loans in a nutshell. And if you have any further questions, feel free to reach out to us directly.
Don't forget to like, comment, share, subscribe, and hit the notification button so you never miss a video. We'll see you on the next one. At least I can dance.
Any further questions,